Welcome to Impact of Tax Reform on Financial Modeling. As a super brief introduction, there's a growing amount of material out there about tax reform. The connection between these new rules and how they actually need to flow into financial models remains unclear for a lot of investment banking and private equity professionals. Okay, so let's begin. So there's some caveats to what we're about to go through today. The first one is that the framework that we're about to go through on the impact of all this to models should be rules of thumb. The tax rules can actually get quite complex. Every company is different, so should always be conducted, whatever analysis you're doing, in consultation with a qualified tax advisor when it gets to a later stage of the deal. The knowledge that we assume for this is some background in understanding how to build financial statement models, as well as DCF, LBO, M&A modeling, and some general knowledge of deal structuring. The assumption is you've gone through either our courses or some version of these courses where you understand how the three financial statements interact, how the DCF valuation model generally works, what M&A modeling is all about, so that we can really focus on the specific issues that relate to tax reform.